And then the last one that we wanted to talk about was, I think it was the capital gain taxes. Tell us about that. How could that potentially change, and what can somebody do, and what advice could we give them in a situation like that?
Yeah, so it's not only potentially capital gains, it's potentially ordinary tax rates that could go up as well. So I'll hit the ordinary tax rates first, and then we'll get into capital gains. So right now, the maximum ordinary income tax rate is 37% on incomes for a married couple over $600,000.
Mm-hmm.
The proposal on that is to restore the old tax rates, which would get us back to 39.6 as a maximum federal tax rate on incomes over $400,000. So not only is the proposal out there to increase the tax rate, but it's also to lower the tax bracket so it applies to more people. So that would be one thing to consider, is just on ordinary income. So your ordinary income is your wage income, your business income, your rental income, interest income, things like that. Then the other side of that is capital gains income. So capital gains income and the income tax rate applicable to capital gains comes into play when you've held an investable asset for more than 1 year. So any investable asset is if you buy a stock, you own your own business and you want to sell it, or in this case, real estate as well. So if you hold that property for more than a year, the gain on that is taxed somewhere between 0 and 20%. Depending on your other income items. The proposal out there is to change and eliminate capital gains tax rates for what I've read right now is incomes over $1 million. So this could easily affect a real estate investor, where say you have a job and you make, between husband and wife, you're making $300,000 in wages. You've got another $50,000 in dividends and interest income. So now you're at $350,000. Well, you sell a piece of real estate, and let's say you have an $800,000 gain on that. Well, if they eliminate 1031 exchange, I can't defer that gain, so I'm gonna have to pay the tax on that. I add that gain to my other income. Now in that example, I'm at $1,150,000. I've just eliminated my capital gains on that sale of that piece of property. And now that's all going to be taxed at an ordinary income tax rate. So it's really something that people are going to need to think about when they're selling properties is, what income is this property going to generate? What other income do I have? And am I going to be pushed over this $1 million threshold? One article I was reading said that they might even drop this down to $400,000. And so, I mean, can you imagine almost every property in California that you've held for a decent amount of time is probably going to have a gain that you're not going to be able to defer under 1031, and will probably push you with your other income items into a tax bracket of over $400,000 of income, and you're paying 40% on that. Throw on another 10% for the state, and you're looking at 50% combined tax.
50.
So wow. I think these things will really, if people really need to consider what their plans are for real estate coming up. Is this a buy and hold situation, or is this something I was thinking about selling anyways? Because there could be the potential for a lot of taxes on these types of transactions where we didn't have to consider them before with capital gains rates. I mean, capital gains rate of 20% compared to a max ordinary rate of 39. I mean, we're doubling the federal tax on that transaction, even without a 1031 exchange. And this doesn't even bring into consideration selling stocks if you're investing in the stock market. And heaven forbid you have your own business that you've done successfully in, and you want to try and sell that business. Now, a lot of that gain when you sell your business is capital gain too. And that's all going to be taxed at ordinary income tax rates. So I just don't know what's going to happen here in the future, but there are a lot of potential increases in tax rates potentially on the horizon here.
Yeah, absolutely. Okay, great.